Well, hello traders and investors. I'm LA Little. This is your daily NeoTA wrap, where we take a look at these markets and they're doing it from a neoclassical perspective. And I know that sounds hollow and people wonder what that means. And tonight I'm going to give you a short tutorial on what that means. Before we do that though, let's take a look at the numbers here and see what happened today. Today, NASDAQ down. Oh, looks like about 1/4%. Same thing with the NDX down 0.13. S&P 1/4%. Silver, gold, they flip around. The Russell was down 0.5%. Oil flips around. So you had money like leaving, quote unquote, leaving the risk and going to the safety. This is just going to flip around and rotate right back the other way tomorrow, and we'll see that here in a minute. But before we go to that, I want to bring your attention to a trade that I pointed out today to members on Twitter. I have a private Twitter feed, and on that Twitter feed I give members ideas, and this was the one today with Allstate. And I did it at the time that Allstate, you can see when I marked up the chart, Allstate was trading down here. I'll blow it up so you can see it, trading down here right at this price point. And I marked up the weekly chart and the daily chart and said, okay, here's the initial buy area. There's going to be another buy area down at the bottom on the weekly. Stops would be up underneath there. And eventually you're shooting for a target that's up towards that level up there on an ABCD structure. And that was what I gave them tonight. Now I want to show you what happened to this, and then I want to explain how you make these trades or why you make these trades and what it means to be neoclassical. Right, so here's the trade. When I pointed it out, price was sitting right about there. Went down a little bit deeper, so you could have bought it in that zone I was talking about, right? And initially, you're going to get back to here almost certainly, right? I mean, not guaranteed, but almost. And the reason for it is you're attacking it with less volume. You could see that at the time of the trade. You were coming back into a bullish retest regen. It was the first time you're coming back within 6 bars. And why is all of this important? Well, because the neoclassical model really focuses on just 2 types of trades. You have breakouts and you have retraces. And there's rules when you want to buy one or when you want to buy the other. And typically you want to buy retraces, not breakouts, and that's because you gather more information, and that, folks, is what allows you to determine the probability of success. People talk about reward to risk. People talk about these things, right? Reward to risk. You see that everywhere. You got to have a 2-to-1 or 3-to-1, blah, blah, blah. And almost nobody talks about probability of success. And that's because nobody can quantify it. And that's because there's all kinds of patterns in classical TA. I was talking to a new member today, and it kind of, crystallized that this is really the essence of the neoclassical model, right? The fact that you can quantify your probability of succeeding on any trade you take, period. Look at any place else. Can anybody else give you those kinds of numbers? Can they tell you that's a high probability buy and know that over time, 6 to 7 times out of 10, you're going to win it? Nobody can do that. They can give you triangles, they can give you wedges, they can give you head and shoulders, they can give you cups and handles, they can give you a god-awful number of classical setups. In neoclassical, we look at 2. Retraces, breakouts. Nothing else. Everything else is a derivative of those 2 types of trades. And once you understand that, that's when it will start, crystallizing for you, and that's when your trading will start to make you successful. If you're interested in what we do, like the new member today, talking to him, it hit me that, this is what I should really talk about, is that you can quantify your trades. You can tell what probability you have of succeeding and not. And if you can do that, that's a big case of winning. Write me, TAT@TA Today, and I'll be happy to talk to you about how to become a member and why you really want to. Let's look at the charts here. Market's going to flip back around tomorrow. Did you really think they could keep this thing down today? Look at what it did neoclassically. So here we go again, neoclassical. You got a breakout. That's what this arrow is. This arrow is telling you that you broke a swing point. That's the swing point you broke. Now that you know the swing point that you broke, you go up. You know the probabilities are high that you're going to retest that swing point fairly quickly. It retests on the very next bar. Once you know that more than likely it's going to retrace into the bottom third. The probabilities favor that. That's what it did today. It retraced it fully, went all the way to the bottom and beyond. But what did they do? They come back in, they buy it. As a matter of fact, this morning in my morning notes before the market opened, I pointed out this area as the area that you should expect them to buy it. And that's what I told members. Expect them to buy it down here. You know, I mean, they're going to chop this thing around. They're still going to try to break it out. They're not going to crash this thing. I know that, you know, there's people worried about crashes, but you got to set up a crash. It doesn't just happen. And you can't get a crash in a market. You're just not going to get a crash when you got the NDX up here breaking out, making new highs. It takes time for those things to set up. The structure has to set up for a crash to occur. And if you look at this on a daily and a weekly, you know, you are dreaming if you think this thing's going to crash. It's just not going to crash. You know, potentially you're going to get a pullback, but we're not talking crash here. And you shouldn't be thinking crash. That's not what's going to happen. Anyway, going back to the S&P 500, so what you got is you got the full retest regenerate, right? So it comes back, does the full retest, flips around, it's going to try to regenerate. In other words, it's going to try to push back higher because this was a bullish retest regenerate. It's bullish, right? You broke out, you come back, now you're going to try to regen to the top side. If it does, it's going to break the last swing point high over here. And if it does that, you got ABCD structures to the north, and you can point them out. This is the huge one. That one's not nearly as realistic as the one that just got set up. And that one is a minor one, which means you barely get a new high. So that tomorrow is probably the target. It's the ABCD of this small ABCD structure that just set up that would get you just over this top 2404, 2405, somewhere up in there. That's what it's going to try to do tomorrow. If you look elsewhere, NDX got a pullback. NASDAQ did the same. If you look at the Russell pulls back as well. And the Russell, as it pulls back, it does a full retest regen again. It's already done it once. It did it again, right? I mean, in other words, it hadn't tried to regen yet. This was the bar. That's the bar there. Let's get that off the screen. So you're messing with this bar. The bottom of that bar is the full retest. That was this bar here when we retested. We tried to start back up, got to push back down today. Gets underneath it. What does it do? It tests in the bottom of this low, tests into the bottom of this one, does a full retest regen on that one as well. So now you've done them both, right? You did this one, and that one, and still holds them all. That's a pretty good feat. That's telling you that this green that you see here is really support. It really does support it. That's what the charts draw up for you as being support today. It tests all the way down to the bottom of that, flips around, comes back up, going to try and regenerate tomorrow. It's probably going to actually do it because you've got structures elsewhere that's going to support it as well. And I'm talking about Europe. If I go over to Europe and pull up, let's pull up the CACs to start with. CACs comes down, and you can see here, these are your volume bars right there. Comes right down into those volume bars. That's where, the overlap, that's what I wanted to show you. It's the overlap of those two bars, comes down into it, right? Flips back around. This thing's going to try and test the highs tomorrow. Now, as they do this, right, as these markets do this, what can happen is that they can't get higher. That's possible. In other words, you come up here and you fail. What do? You come back down, you test again, right? Potentially you test a little bit lower. And what do? You start building out a range. You build out a range long enough, then you can get a structure that will allow something larger to the downside. But in the meantime, it's a bull market, folks. Don't fight a bull market. Just do your best to go with it. Or worst case, just stand aside if you're that nervous. But don't try to go against it. that's where we're at tonight. Again, if you're interested in what we do, you want to know how to do a probability of success, you want to know what those rules are, write me. Let's talk. Take care. See you next week. Good night.